Hi, Rich.
Matt,
again.
How are you?
We're back. Episode 4 of Money Matters podcast. Today's going to be all about a Q&A. I posted on my social media page, Instagram page, on some questions that people had, and got a lot of responses. So we're going to kind of run through those.
That's awesome. That's awesome. Yeah, more responses, the better. The big thing is getting your questions answered. That's what this forum today is about.
Yep.
There's probably, every week it would be great to have new questions, right? Like,
yeah,
because we want to answer those.
Even if it's just like one or two, just something to answer would be awesome.
Exactly. So, we'll be posting out to our Instagram, weekly on, just to get your questions. You can reach out to us on Instagram. Racine Realty Team is my Instagram. You can go on Facebook, the Racine Realty Team, or at Rich Racine, which is my personal page.
Right. And then for mine, it's at mmcdonald01. I don't know why I did 01, but it's 01.
Because you're number one, baby.
So we have we got 9 questions. We're going to kind of not rifle through them, but, just getting some good Q&A in. So we will start. Kind of the biggest question I think I got was, what is the first step to buying a home? And
just to pause it, if this is one of your questions too, let us know. If you have a similar question, let us know that this was helpful. Because we're doing this for you guys. We're doing this for everybody out there that has questions, but doesn't know what to do.
Right.
So, anyway, so what's the first step?
It's first step in buying a home.
First step in buying a home. Well, there's a lot of ways to look at it. Contacting an agent, lender, is first step, right? Go that route.
Yep.
Find an agent.
Yep.
Find a lender to contact with and have them help you prepare.
Right.
Because you might not be ready yet.
Right. Right.
And knowing that is important.
And it's funny because I would actually agree with the agent first. And it might seem weird that the lender's saying, oh, don't get pre-approved first. And obviously that's the first step before you go to actually look at houses. Yeah. I would always tell somebody to get pre-approved.
Yep.
But to me, the agent is going to recommend a lender to you if they're a good agent. They have lenders that they work with. And when you hire an agent, to me, you're hiring their network and you're hiring their sphere. So if you're going to trust them with either selling or guiding you through buying this huge asset, why would you not use their sphere of people that they trust? Because there's a reason they work with them. So for me, I always tell people, find the agent, then let's get pre-approved. And now you got your team next to you and you're ready to run.
Right. Yeah, because, going through this, as an agent, I get that question a lot, or I get a question of who's a lender, or, hey, who can help me move, or who can, fix a sink for me before I move, or after I've moved, who can fix a sink? Oh, I need an electrician. Oh, I need we've got that sphere, as you said, of people to recommend. That's just the nature of the business. You want someone that has the sphere to recommend, right? That they're out there talking with people and that they're doing this, and that's the person you want. Yeah, exactly.
Awesome. Yeah, so kind of, cycling into that, next one would be, where do I find the right agent? Right, that's another one where I got a couple of times. Is okay, I know to find an agent now, but where do I begin to look?
And so a lot of people will ask their friends, ask their family. That's the biggest recommendation you can get, right? If your parents use someone they like, or your best friend use someone they like, you're going to find someone there.
Right.
You go on Google, look at whoever it is, right? If you even get that recommendation from a friend or family, go on and Google them.
Right.
First and foremost, Google them. Find out, look at their reviews. If you don't know how to Google them, go on Facebook. Look at their reviews.
Look them up somehow.
Look them up. Go on their LinkedIn. Right. They should be on every platform, because that's the nature of the business. Again, is that they should be on platform and they should have reviews.
Right.
Look at how many reviews. Do they have 5? Do they have 50?
Right.
Are they 3 stars or are they 5 stars?
Yeah.
Are they 4 and above, or kind of figure out what's going on.
Right.
While you're doing that, there's no reason you can't just type in, real estate agent in Londonderry, real estate agent in Manchester,
right,
and see what pops up.
Right.
You know, see who's on the top 3, top 5, top 10. You know, find out someone who you might want to work with in that situation. You know, read more about them. They're especially on Google, their profile should be filled in pretty well.
Right. And this to me would be all red flags if they're not. Right.
Yeah.
If I can't find that agent's email, or I can't find their phone number or their social media, it's like, are they even still in the business? Are they still doing it? Like, what is actually happening here?
Exactly. I mean, you know, before it'd be look in the paper or a magazine, right? Well, we're not there anymore. Look on social media, look on the internet.
Right.
Yeah. Right. So it's not, you know, open up the Sunday news and see who's selling houses.
Yeah, exactly.
You can do it that way, but you know, it's definitely jump on social media, jump on Google and check out the people that are there popping up in the area you're looking to buy, or sell.
Do your research. That's again to kind of add the lender's perspective. I would just say do the research. You know, make sure you know who you're going to work with. It's not, you know, not every agent's the same.
Yep.
I stress that a lot to people. Not every agent's the same. There are some very good agents, and there are unfortunately some very not so good agents.
Yeah, and unfortunately, you know, sometimes that happens, and you know, if it does happen, you find someone that you unfortunately don't like, have the conversation.
Right.
You know, try and figure out what's going on that they're not meeting your criteria.
Right.
But you know, for the most part, there are a lot of good agents. But yeah, there are some that don't necessarily meet your standard, and not every personality fit's going to be the right for you.
Exactly.
You know, so if it's just a personality fit, sure, I got it.
Right.
You know, I can understand that.
Right.
But for the most part, yeah, everybody should be out there, should be able to, you know, do some research and see who's got, you know, what for reviews and things like that.
Yeah. So, okay, you find the right agent. Now, I didn't realize how well these questions cycle into each other. Question number 3, you find the right agent. Do buyers/sellers have to sign, they worded it as contract, but like, you know, agreements or listing agreements, what's it, like a buyer's exclusive agreement or something along those lines.
So yeah, you kind of answered. There are agreements.
Okay, yes. Yeah. So is that something where every agent has it? Is that something where it's, you know, broker to broker? Is it just, you know, Mass has it, New Hampshire does it? Like, how does that work for let's go to the buyer side, because I feel like that's more so where people are questioning here.
Yep. So from the buyer's side, there is a buyer's contract, if you want to put it, you know, simply. It says that the buyer's going to exclusively work with the agent, and the agent's going to give the buyer 100% of their time, effort, and energy in locating properties, locating sellers for that buyer, you know, giving them their referrals to their sphere, to their lender, and the title company, and making sure that, you know, they're taking care of the entire way. After the you know, certainly during the contract and after the contract, and then working up to the contract, you know, all of the time that's going to be spent, you know, locating the properties like I mentioned, or you know, getting them under contract, submitting the offer, negotiating the best price and terms for the buyer. You know, it might take 3 weeks. Might take 1 showing, might take 3 months. So, you know, having that exclusivity is key, because then you know that person's going to be working directly for you and is going to commit their time for you. Without it, it's tough, because there's no, you know, defined relationship there. You know, if I'm not going to commit 100% to you, why would I sign the agreement anyways, right? Like, I'm committing to you that I'm going to give you 100% of me. And in turn, I also want that exclusivity that you're going to give 100% to me as well. Like, you know, we're going to work together. We get a relationship here.
And that's exactly it. You know, you're on the same team. You want to be on the same team, and you want to make sure that, you know, when you're going out and scheduling these showings and setting up times for the buyer to see the property, you know, you write multiple offers for them, that they're not just gonna randomly, you know, say you go on vacation for a week, and then it's like, oh, well, I can't. Well, this other agent showed me this house; they're gonna get my business. It's like, well, I just worked with you for 3 months.
And that's the conversation we have too, right? And it's like, you know, if I'm not available, you'll know. If I'm not available, then, you know, I'll still contact me. I'll get you into that showing. I'll get you into that, you know, with either my mother who's a part of the team or another agent in the office or something. We'll get that worked out. You know, still contact me.
Right.
That's fine.
Right.
No big deal. I could be in Costa Rica, or it could be like, what did I just go to? Kennebunkport. You know, I was, yeah, we did a little camping with the kids, and my son's 4th birthday.
Yep.
So, you know, I'm still happy to coordinate that stuff. It just won't necessarily be me standing there in front of you, showing you the property. Yeah, exactly.
Right.
Exactly.
Awesome. So now another one, number 4 of 9.
4.
I'll have you start from the from the real estate perspective, and then I can kind of go on the lending perspective.
Well, I think we missed one about do we sign a contract, because the listing side too.
Okay, good. Yeah, good call. So let's dive into that. Yeah.
Yeah. So there's a listing agreement that says that, you know, again, as an agent, I'll work, you know, 100% on your behalf to get your home sold for the highest amount of money, the best terms, and the quickest time. Right. You know, that's kind of how we want it done. We want it for the highest amount of money, best terms, and we want it done. Like, you know, that's what everybody wants. Right. So yeah, there's an exclusive listing agreement that says that I'll work to do that, and then in turn, the seller is also going to work with me in getting, you know, everything that we need as far as, you know, disclosures filled out in a timely manner, that they're going to allow for showings in a timely manner, that, you know, that any concerns or issues or scheduling or whatever, that we're going to work together, similar to the buyer side, that we're going to work together on that.
Right.
Awesome.
So yeah. So both sides have them.
Yeah, exactly.
Conclusion.
Both sides. Exactly.
Both sides have them. So number 4, what is the difference between someone local on the lending perspective versus a big national bank? From a real, so let's talk about from the agent perspective, because I think this is, you know, they hear it from the lender and they're just like, oh, he's just trying to sell me on his services. But from the agent side, right? How do you view an offer that may not be the right wording, but maybe that has a pre-approval from a big bank versus, you know, someone local? Maybe you haven't worked with the person local, but, you know, you recognize the company name and you know they do a good job. Yep,
that they do business locally. Yeah. Correct. So there's a big company that starts with R and ends with Ockett, and they've got a mortgage company that does business, and they've if you see something like that come through from the selling side, there is question, right? Because they're not going to, because I've called and I've had other, you know, people tell me the same thing, that when you call them, like they haven't done any checking of this buyer's credentials. Yeah. Literally nothing.
It's an online form.
Yeah. Hey, if I go on and tell you I've sold 1 million homes and I've got a 5-star review and I'm the best, okay, great. Now, if you can't verify that with looking at my reviews and my stats, then it means nothing. It
means absolutely nothing.
So that's kind of what I'm trying to get to is from a lending perspective. Like, you go online, you fill out this form, you say I make $1 million a year and I've got 843 credit. Right. It doesn't mean anything if it hasn't been verified. Yeah. And some these bigger brokerages, bigger mortgage companies, they don't necessarily verify them on the onset and will give a letter to give a letter. Right. And then come to find out, you know, towards down the road that they can't buy the house and you've been under contract. So, you know, you kind of scrutinize that a bit more and, you know, recommend, I recommend to all my buyers to have a local lender, recommend to my sellers that, you know, we
take an offer.
Verify. We'll take an offer from someone if there's multiple offers. If not, we're going to verify what's been going on and hopefully, you know, find out whether this is solid or not.
Honestly, just a legitimate pre-approval.
Yeah, like, you know, and there's no reason that I can't say, hey, you know, contact Matt and go through the same approval the approval process, see if this is even legit. Right. And maybe find out that you get some better options through going through Matt.
Through that way anyway. Right. So from the lending perspective, the difference between us and myself and them, when, you know, the one that starts with R, we just communicate better with everyone in the transaction. And as you now know, you know, agents want to work with somebody who's local because of that. It's not so much the expertise of the area, because that's not my position to be, you know, oh yeah, that 3-2 in Londonderry is definitely worth that. Like that's not why you do it. Right. You do it because people recognize the name. they know we're fast. They know we're going to be communicative,
responsive,
and they know we're going to be responsive, especially after 5 and on the weekends. So that's a big thing. And then when it, from big banks, because I think a lot of people shop us with big banks because their bank reaches out to them when the credit gets pulled. They want to make sure they keep the business in house. And I always tell people, we do mortgages. That's all we do.
Yeah.
Banks do mortgages and auto loans and personal loans, and they have their own credit cards, and they do all of that. So they're not worried about the mortgage because it's actually a loss leader for 90% of banks. People don't realize that. They don't want to make money on it because they want your assets. So they'll give you a better rate on the mortgage to then take your assets and then go invest it and lend it somewhere else. And we have people that have come over here from banks that begin with a B, and they tell us about the process. They tell us about the underwriting process and what they've had to go through, and it's a nightmare. It's a nightmare for the loan officer. It's a nightmare for the buyer. It's a nightmare for the agents. Like, no one likes it. No one enjoys it. So it's a massive difference. It really is.
And one of the keys I think that you mentioned is like being available because, well, guess what? Most of this business doesn't happen between the hours of 9 and 4 or 9 and 5. Like, it just doesn't because buyers and sellers are working during those times. So if there's a question, it's typically after the hours of 5. Some are urgent, some are not. Majority are not, and they can get handled between the hours of 9 and 5, the following day. But something that's a little more urgent, like, hey, we're closing tomorrow, and we still have this one document that's outlying, like, I got to get it to the bank. Well, if they're not open till 9 a.m., then we won't know. But like, hey, maybe we can get this thing started tonight. And then the underwriter can hit it in the morning, and we can be fine. Well, that's where a local professional comes in handy.
Exactly.
Again, it's not the everyday norm, but when it does happen, that's why
you go with
local. You want local because it's like, the stress of that can be like.
And then another quick point on the big retail people. You're not going to speak to the same loan officer twice as the buyer. So if someone new is taking on your file from that call center and trying to review it all while you're on the phone with them to answer questions, he can't possibly know what's happening, especially if your file is very, very tricky. Like, they can't possibly have a full understanding. So, they may just give you an answer to get you off the phone and then pass it off to the next person. So just be aware.
These things happen. Exactly.
Quick one. Number five. What's a security deposit for a buyer? What does that mean?
Security deposit, so earnest money deposit is like when you go to rent, you put your security deposit down to hold the rental so that they don't rent it to somebody else. Same thing, earnest money deposit is your good faith deposit so they don't sell it to somebody else. And that states that you're going to fulfill the contract. The purchase and sale contract is very buyer friendly. So there are a lot of steps along the way the buyer has to fulfill. And if they can't, because of some sort of outlying thing wrong with the property, then they have that option to get that earnest money deposit back. The typical amount is 1 to 3% of the purchase price.
That's good to know too.
Over the last, previous coronavirus craziness that we're having with the market, there was it was recommended, and I would advise it myself, the higher, the more serious you look. So the more money that you put up to say, hey, I want this property, the more serious you put up. Now, as long as you meet all the deadlines in the contract, there's no worry of losing it. You're going to work your hardest to get those contract deadlines, fulfilled. And it goes towards the purchase price of the home anyways, in the end.
And that's what I was going to add on is it comes off your down payment at the end of the day anyway. So it's not like it's money you're just losing. So you have a $20,000 down payment and $10,000 security deposit. At closing, you just owe $10,000 on the down payment plus the closing. So it's not like you're just losing the money to just give to them. It doesn't go anywhere. It's held usually in an escrow account,
with the other with the selling agent's brokerage typically.
So the seller doesn't just take the money and then
they don't get it in their hands and go to the casino.
Exactly. So it's a safe fund. There's a lot of regulation behind it. I know that. So I think that's an important one because I don't think people realize that you got to put You gotta have skin in the game when you go to enter the contract.
I mean, you can put as little. It's any good faith deposit. It could be monetary. It could be a gift card to like a dinner for $20. It literally
could be anything.
It could, it can be anything, but it's got to be something,
right?
And I would say that 1 to 3% is 1% is kind of like has always been the standard in New Hampshire. If you go to Mass, it's like 3 to 5%.
It's crazy.
It's huge,
and it's crazy because it's like $1,000 now, and then like 40 at purchase and sale. It's like, what is going on?
Yeah. So people that are coming to New Hampshire and using Massachusetts agents, you can tell right away.
Yeah,
because you're like, oh, $30,000 earnest money deposit. Wow,
sounds great.
That's phenomenal. But it's just the norm, in Mass.
Yeah. All right, number 6, best advice that you give for first-time home buyers in this particular market on July 27th, 2022.
This particular market, best advice for first-time buyers, obviously get in contact with an agent, get your approval, find out what your monthly payment looks like at whatever interest rate we're at today, roughly, and go shopping for homes within that approval amount. If you don't want to compete, like I've been telling my buyers that are they don't want to compete, they've either stopped and now they're re-entering the market, or maybe they're entering the market for the first time and they're still a little skittish.
Right.
Let's look at homes 21 days on the market.
Right.
There's zero wrong with them.
Yeah.
They're just not what other buyers that are being a little bit more picky and choosy, which they can because there's a lot of inventory. Let's look at those homes. They're perfectly fine.
Yep.
It's just, and the other thing is too, those first. So the reason they're still on is because people always look at the brand new homes.
Yeah.
And they never go back to the ones that were brand new 3 weeks ago.
Yep.
That maybe they missed.
Yeah.
Or maybe they looked at, but there was 3 other homes that were better that they did look at.
And then they just forget
about that one. And like they would have shopped at that one the first week, but there were 3 others that were better, so they didn't. But then they forget about it. They could have gone back to it, and they still can. And I always try and remind, especially right now, that there's nothing wrong with those 14-day on market homes, 21-day on market homes.
Right. It's actually typical. Like,
yeah, it's a normal market.
Normal.
Yeah, it's a normal-ish market.
Normal.
Yeah, instead of 3 to 5 days, and oh my God, what's wrong with it after that?
Right.
So look at those homes but be looking at homes. Go to open houses. Pictures don't always do it justice.
Right.
Drive by the home first. If you think it's something that you like, drive the area, because number 1 rule in real estate is location.
Right.
If you don't like the location, then you're not going to like the home. Yeah. Like the home could be phenomenal,
but if it's not the right spot,
next to the highway, maybe you don't like that.
Right. Exactly. And then from the lending perspective, I always tell first-time home buyers, I ask them always what their budget is for monthly payment, and I don't want to say I play financial advisor, but I'm like, hey, stick to that. Like, don't overstretch yourself on your first house to try to impress other people. And I think
it's your first house.
It's your first.
You're called a first-time home buyer for
a reason. Right.
It's going to be your first. Right. 5 to 7 years from now is going to be your second.
Right.
And then probably 5 to 7 years from now
it's going to be your
third.
And then now you're probably staying in that house.
Yeah.
For your life.
Yeah.
But I always ask them what their payment is, and I keep them relatively to it. Like, okay, if they're $100 over it, it's not going to make or break them. But if they say they want to spend $2,500 a month, and then they're looking at homes that have $3,300 a month payments, I'm like, okay, like what are we doing here?
Yeah,
like big. That's a pretty big jump. Yep. So I think just really thinking about it, talking about it, making a budget for yourself, and then just like, okay, what do you want to spend, and just stay true to yourself with that, and then you don't cause yourself any issues.
Nope. Yep, exactly. You want to be safe. You want to be comfortable.
Right. Do one more.
Good home. Yeah.
We'll do one more.
Yeah. We can do the rest of them.
Okay.
We got time.
Sweet. Rent to own option. Okay, so what exactly is that? And is this a market that's even an option for buyers?
So rent to own. Home seller wants to sell, and you want to rent until maybe your credit's better, or until you have more money saved, or typically what I've seen is that it's a credit thing. So renting to own, it was popular when sellers couldn't sell. Okay. Right? They couldn't sell their house. but they had this house that they did need to get out from the monthly mortgage.
Yep.
So they would offer a rent-to-own situation to buyers or would-be buyers. It's been rare the last 5 years.
Yep.
However, I should say that you very likely would find someone who is an investor who has a home that they would do this with, because they maybe own the home outright and they have that ability to rent it to you, still make some money, and then at the end know that they're getting X amount of dollars. Because in that contract, that rent-to-own contract that you have already kind of agreed upon purchase price,
right?
You know what your monthly payment's going to be, and it's all in a contract. So again, that investor knows, okay, hey, I'm going to get X dollars a month, $1,500 a month, $2,000 a month, and then at the end of it, I'm going to, they're going to pay me the $450,000.
Right, right. How long do you usually see the rent for? Like, is it a 2-month thing, a 5-month or 6-month thing? Is it a yearly thing? I don't know if you've
whatever you can negotiate.
Gotcha. Okay.
It's if it's let's say a buyer has a credit issue and they find someone who's willing to rent to own, and they've talked to their lender, and the lender's like, well, we can do these things and get your credit up, but it's going to take you a year or two. Then it'd probably be best to say, hey, it's going to be 2 years. Maybe it's 5 years.
Right.
Maybe the person that you found that does the rent to own wants you to do it for 10 years.
Right. Right.
But then it all depends, right?
Gotcha.
So whatever you can.
But again, that happens in a very strong buyer's market, which we are obviously not particularly in now.
No, we might be heading there,
but we might be heading there. But so it's not overly common now. I've never even run into it since I've been in the business, but that doesn't mean it's not going to be a thing in the future.
Yeah, again, in specific markets, this happens. If you go to rentown.com, I think it is, there's specific markets that rent to own is popular because they can't sell houses very well in those markets. Like, some Midwest markets, stuff like that. Like, they just can't sell homes that well. So it makes sense. Rent to own. Great. It's an easy to get into for a buyer, a would-be buyer that maybe doesn't have the down payment set up. And that's another thing too. Like, rent to own, you could get in for 0 down, and then the rental money is going towards your down payment. So that might take 5 years or 10. Right. Till you get enough money to be considered your down payment. Right. And then you can buy the house.
Right. Yeah, exactly. So, exactly.
Certain markets and, certain areas of the country.
Second to last one. This is a very popular one. I think this was the most asked one.
You're kidding.
I
hope I can answer it.
Does the buyer pay the buyer's agent?
So the buyer pay the buyer's agent. Depends.
It's good. I like that.
Depends.
I was wondering how you're going to answer that.
Yep. Depends. So typically in a listing agreement, which we talked about, there's a set fee that the seller and the seller's agent have worked out. That fee then gets split between the buyer's agent and the seller's agent. So the seller, to come back to that, the seller is essentially paying the seller's agent and the buyer's agent. Yep. Fantastic, right? Right. For the buyer, no extra money out of the pocket.
Correct. However.
Depends. However, and so back to my depends. Let's say you find this great. So in that buyer's agency agreement, there's a fee that if it's not being provided from the seller, like typically you'll find on the MLS, you'll find a seller who's paying their agent, and that agent and the seller is going to pay both agents. Yep. So in the buyer's agency agreement, there's a section where if the seller's not paying, then you agree, Mr. and Mrs. Buyer, to pay the buyer's agent, pay your agent. So when that would typically come into play is if you find a home that's for sale by owner. Yep. And maybe they're not willing to pay a buyer's agent. Yeah, or any agent for that matter. Then, I mean, we have a couple ways to work it out, but essentially at that point, maybe the buyer's agent then the buyer needs to pay their agent. Yeah. Now we can raise the purchase price by, get some credits back, and that can pay you, and you basically just financed your buyer's agent's payment. Right. that's one way to do it. We can break down how that works on paper. If any buyers or anybody's like, what does that even mean?
Right.
We can actually write
out
and
some examples. We actually probably get a whiteboard. And
exactly. Write it out and say, hey, you know, we're going to raise the purchase price, take this off, and be good. Like, we can figure it out where it doesn't have to come out of your pocket if that's tight.
Correct.
You know, maybe what the seller is offering isn't enough to cover what in that buyer's agreement you've, you know, agreed to. You know, if it's, you know, Y%, but they're only offering X, well, how do we get to Y?
Right.
You know, there's
only really one way.
So someone's got to pay it. You know, and again, we can go back to either the buyer pays it directly, or we raise the purchase price and ask for a concession. Stuff like that.
Right. So there's ways to do it. I'm actually kind of glad you brought that up, because I think a lot of agents are like, no, the seller pays. It's like, well, granted, in about 95% of cases, yes, but there are cases where sometimes you got to cover a difference, or for sale by owner. So I'm glad you brought that up.
And if you want to track back where that money came from to the seller, my answer might actually be yes. The buyer does pay the buyer's agent, because guess who pays the seller?
Guess who pays the seller?
The buyer. Right. So yeah, you kind of do.
Right.
In a roundabout way.
And if you really kind of follow the money, where it's coming from.
So yes, you do.
Technically,
but it's a part of your loan and a part of the process.
Right. Awesome. So the last one is probably more on my end, but this is one that I get a lot, not just from my Instagram posts, but just from kind of everyone that I talk to, whether it's a family cookout or something. It's like, well, how much money do I need to buy a house? That's like everyone's number one. Like,
I get that. And I'm like, well, it depends on your situation. Ask Matt.
It varies so drastically. But the minimum I usually tell people to be as conservative as possible is, I say, take 6% of your purchase price, and that will, in a lot of cases, cover your down payment in your closing. Now, yes, there's VA loans that you can go 0%. There's USDA that you can go 0%, and that number may be different. But on a very general stance, you need about 6% of the purchase price. I can't tell you a definitive number, because, you know, a $500,000 house needs a different money than a $200,000 condo versus a $1 million house. Like, it all so drastically varies. Generally speaking, 6%.
So a percentage of the purchase price.
Right.
Have you ever seen it where, yes, it could have been like 3% down FHA, but this particular property and maybe this particular person's DTI changes what they're going to have to put down?
Yep. So that also is why
it's income is DTI.
Debt to income. One of the main factors we use in qualifying. So that does happen sometimes. You know, you may have to switch it to 5% or to pay off debt or things like that. I mean, that's another thing that we could actually probably talk about in another episode, is kind of structuring this stuff. But, you know, usually if it goes 3% and we need a DTI fix, I usually go more towards the debt end, because if you're spending another 2% on the house versus 2% to lower some monthly payments, you're going to actually be better off paying debt off for debt to income wise. But that's still money you need.
Interesting.
Yeah. So, I mean, we've had people that have paid off, you know, $6,000 car loans and saved $500 a month versus $6,000 down on the house. It's only going to save you $40 a month in payment.
Right.
So, like, how you spend that money actually varies drastically. So that's usually the route I go, but you still need an extra however much. So so that still plays into that. It's
a couple variables. So like that's why the company starting with R and ending with Ocket might not be able to help you as well, because this particular scenario, you know, might happen. And if we don't know that till the end, it's tough, right? It's tough. So getting a local lender to find out your debt to income, find out the purchase price of the property you're trying to be at, and maybe, you know, working with you to get, okay, because of your debt to income, because of your credit, because of this, because of that, like, there's a lot of variables. Well, like, let's call Matt. Let's see what those variables look like and see where they bring you.
And that's where I'd like to break it down in pre-approval stage. So it's like, hey, here's the pre-approval number. If you buy at that number with that exact down payment, here's the estimated payment, so they see that number, and then here's the total amount of money that you need. So that way, they buy at that purchase price with that down payment, and they see the loan estimate that says that number, it's like nothing surprised.
No,
it's not like, oh, well, you didn't tell me that. Like, you know, everything's up front. But again, yeah, 6%. Generally speaking, for a lot of first-time home buyers, that's generally what you're going to be needing.
And just to clarify, that's down payment and closing costs at a minimum.
Correct.
Right? So, you know, if it's 10% down, then you're going to factor, if like you've got to do 10% down, then we got to factor in closing costs, which are 3 to 4% of the purchase price. So maybe 13 to 14%. Yeah. Okay. Yeah, that makes sense.
Awesome. I think we should do one more to make it 10 really quickly.
10.
Our inspection's coming back.
Yeah.
Yes.
Inspections. Wow. Who would have thought?
Who would have thought?
Inspections would have gone away. Like, hey, I don't care what the house looks like.
Right.
I'm guilty of it on multiple properties for myself. I had to.
Right.
So yes, that inspections are back. Let's see. The last 3 in the last few weeks, all 3 have had inspections. All 3 did not waive appraisal. All 3 actually got credits back from inspections.
Awesome.
Actually, only 1 needed credit. Sorry, not all 3. But
no, but
they all had the ability to.
Yeah.
And yeah, appraisals and inspections, those are back. I will give a however.
I love the howevers.
However, there are still phenomenal homes that people are competing for and bidding for. So that's also why I recommend 14 days on market, 21 days on market. Let's look at those homes.
Right.
Because we won't have to go that crazy.
Right.
Homes just coming back on the market from being under contract. Let's go look at those if you like them.
Right.
Right. It doesn't mean something's necessarily wrong with them. It means something's wrong with the buyer that was trying to buy it. Well, potentially, right? Like there's a lot of variables there. But yes, but however, right? Like there's still homes that are competitive because they are HGTV homes.
Yeah. You're probably not going to be able to get an inspection on
That's still kind of the way on some of those homes in those areas at the right price.
Yep.
Some of these HGTV homes are still overpriced.
Yes.
With their wish pricing, which I, guide and advise if we want to sell this home at or just below market value.
Yeah.
We'll get you competition that you're looking for.
Right. Right.
And get your home sold for the most amount of money, the best terms, in the least amount of time.
Awesome. Yeah, I just thought about that as we were going through because I've gotten a lot of purchase and sales with either inspection for buyer's knowledge only. That's kind of been a popular wording, unless the repairs exceed like 10 grand or it's been something like that.
5,
like
10 grand,
like if
whatever.
the septic shot, like we're gonna have to do something about that.
Yep. All that language
or
is
just
back.
flat out. There didn't waive everything. All inspections are there. I'm like, whoa.
Yeah.
Like this is so weird.
It's different, right?
But it's awesome. For me, I personally like that a lot just because, I have first-time home buyers. That's a lot of my clientele. And it's like they're stressed enough.
Yeah.
And it's like, they moved in.
Safety and security. Like you got to know something about the home.
Right.
Other than, it's got a roof, it's got walls, windows, and doors.
Yeah, it's got hardwood floors, but
that's... And sometimes you forget about that walking through it so quick.
Yeah,
Unless you go back and look at a picture.
Exactly. So awesome. I'm glad we got to do 10 there. So
that was perfect.
So 10 questions. If you guys have any other questions, again, we're going to post regularly to our social medias. So, we want you to ask, even if it's, one a week, we can answer and kind of dive into it real quick, even if it's just to begin the episode and then kind of move on to a topic at hand. But I think this was very productive because I think these are very common questions, but we got to really kind of dive in and give more than just a quick buyer pays agent or I don't know, you need X amount down. Like it's more you can kind of really dive into it.
Exactly. And tell us if you like this type of stuff.
Yeah.
If you tell us if you don't like this type of stuff. Tell us what you do like. You can go on my YouTube at Rich Racine, subscribe to that. You'll see all this stuff weekly. You can go on any of our social pages, Rich Racine, Racine Realty Team, to be able to again leave those comments, questions, and and, you know, give us feedback.
Yeah.
You know, subscribe to anything, like us, anything. We'll keep doing this stuff.
Yeah.
And same on Matt's page.
Yeah, absolutely. I'm going to be posting, you know, I want feedback on it. I think that's the only way we're going to be able to grow is if, you know, we want to hear what you guys want to listen to. Yeah. And we're going to talk about what you guys want to listen to.
Exactly. We want to be able to answer your questions.
Yeah. Yeah.
So give us some questions.
So give us some questions.
Yeah.
So awesome. Episode 4 is down. Stay tuned for episode 5, filming next week.
Filming next week, episode 5. And that's why money matters.
That's why money matters.